family mode.
Okay, traders. Hey, what's going on? Jamie Setley here. It is uh, September 22nd, 2016, midweek strategy webinar. Let me know that you can hear and see the chart. Started about 30 seconds early here. You've got Carney from the BOE is going to be speaking here in just about 10 seconds. And I got the cable chart up. Remember, we are bullish, or I'm bullish cable based on several things, but you've got the triangle, which appears to be underway. Remember, we held the big support down here. So I'm looking for an entry on weakness in cable, but do be aware of 3136, 3150 area, month open for possible resistance in cable. Actually, again, it's the month open, but it happens to intersect the trend line here. And I'm following, I usually don't, this is like Mike's type of stuff, right? I usually don't follow slope that's this short term. But in this case, wanting to maybe get a more precise, entry, I am looking at this new upslope here, okay? Potentially kind of go in with some size. You've got the downtrend that I guess composes what we're calling wave C of this drop. To me, you got essentially the former channel line here, which you did dip below it back here last week, but then again, look, it was resistance, okay, on the bounce. You can actually throw one over here. We were actually use this to short right here for the final drop into this level, but you're watching this blue line basically for support at this point. Consolidation yesterday was resistance here after initial reaction on FOMC. This is FOMC spike higher, right? Came off. You traded around it last night before we started to. You can see it right here, the blue line, right? So it was even support on the way up during Asia. So that's what we're looking at as far as a cable chart's concerned. So I don't see much going on here just yet as far as Carney or whatever. It's always my belief that the market's going to do what the market's going to do, as simple as that sounds, and that the levels in the market will dictate the trades and the patterns. So that's why I'm not really even paying attention to the words that he's speaking. I've got the chart up. So if we zoom out a bit on cable, so remember, we're calling this, or I'm calling this wave, and it could be more bullish than that, or it could be completely wrong. But the distinct rally, okay, in 5 waves from this low here, right? 1, 2, 3, 4, 5. Okay, that's quite clearly a 5-wave rally, is it not? It is. All right. So you've got this 5-wave move higher from the low back in July. All right. Since then, we have had these 3-wave movements, right? A, B, C, A, B, C, okay? A, B, C. In other words, you can count here. You got this 3 down, 1 up, 5 down. So that's 3 waves total. So why, the reason I'm labeling it the way I am is it's basically big A. What the heck? Where's the labels? There we go. All right. So the reason I'm labeling it the way I am is because that 5-wave move up. So I'm thinking that's probably, larger wave A. 3 down, so, A, B, C, and then that would be A of the triangle. Okay. And then we're looking at A, B, C. Okay, B of the triangle. A, B, C, right? C of the triangle. And then looking up here for a D wave. Okay, and I'm thinking that we get to about 133 before you've got decent resistance for that triangle. Main reason, 132.77 area, good highs and lows. But then the other, and we've talked about it a bit recently, but the 618 relationship between alternate legs and triangles, you usually have a few of them, and we haven't had one yet. So if it is a triangle and you stop at 33, 3304 is where the proposed wave D would equal 618 proposed wave B. Then set back in wave E is what you'd be looking at. So it would be like that, D, E, and then that would be your B wave, your big B wave, right? A, B, and then you'd be talking about a rally that goes way higher, like way higher. So this is kind of, something to track moving forward. There could be a couple trades in here. I'd like to be long at a decent level for this proposed wave D, right? Then wave E, which could take on several different forms. Okay, you could end up having a triangle where you go back and forth and it gets really tight. Okay, as often does happen before you get a much bigger move. But eventually, under this interpretation, you're talking about basically looking at, getting long for a much bigger move to the upside. So this is where my head's at as far as cable's concerned. And I think it is quite clear as far as the patterns of 3-wave movements since the July high and the 5-wave move off the July low, right? So one of the better opportunities, in my opinion, moving forward is this pound dollar trade. All right, let's move on then to euro. So I showed on I guess it was Monday, or was it Sunday? I think it was Sunday's post. The decline in, let's see here. That's not it. That's not it. That's not it. This is probably it. Yeah. So the decline in the euro earlier this week ended up with what I call the RSI reversal signal. Some of you might be familiar with kind of this concept or this idea. All it is simply when you get a swing low in the indicator, okay, but is not price is not below the price swing low. So let's just take this example here. The latest one might not be as obvious. Let's take this example right here. All right. So you can see this one, okay? So in this one, you can see the RSI swing low is here, the associated swing low with this price low, okay? You then get a 3-wave decline in price, and the swing low in RSI is below the swing low in RSI here, yet the price high is above it, okay? So that's actually a bullish signal or a bullish kind of warning. I just have these programmed so that it tells me if RSI is at a 20-day low, and price is not at a 20-day low. In other words, price is above its 20-day low. That is, signals a bullish warning to me, and the opposite's true, of course, if it's a bearish warning. And generally speaking, these will keep you on the right side of the market. The timing might not be perfect, but like in downtrends, okay, you will get typically only sell signals. Okay, in uptrends, you typically will only get buy signals. Okay, in sideways trends, you get both. And, in this instance, you actually had one back here on 8.2. Actually would have worked for a little bit. So that's all that is. And let's combine that then with the fact that we actually had a reversal yesterday. We had 2 J spikes. One of them was euro. Okay, so that's a good indication that I think we're headed higher in euro, and that we might, keep fingers crossed, be close to the end of this, for lack of a better explanation, hellish range that's been underway for a very, very long time. There is some good slope stuff to pay attention to in this. Let's see. Here's the euro. Okay, here's the 4-hour euro chart. Okay. Now, this is, if we go back to the daily, so you know where this is coming from, these lines. Okay, remember we're going here, here. So October 2015 high, July 2015 low, and December 2015 low. All right. And if we go to the 240-minute chart, you can see the various inflection points. So what we have is a confirmed, we talk about raised floors, right? And we talk about raised ceilings and lowered floors and lowered ceilings. So all we're looking at here is that we're saying, here was support down here, right? Brexit, and then the late July low, right? Well, after that, you had a rally, okay? You had a decline here. At this point on August 5th, you actually had a raised floor. We didn't really know it yet because you don't know it until the market goes back up. Well, the market went higher and it went to a higher ceiling. In other words, this high up here, okay, is above, the plane that these highs are on here, okay? The pullback has found support at the parallel that extends off of the low from August 5th. That's a confirmed raised floor. So what we expect now is that the next resistance should be, if we are indeed in an uptrend, the next reaction or decent resistance, I should say, should be probably on this line up here, right? Called market in red, should be up here because this extends off of the higher ceiling, right? So that's what we're looking for. Looking higher up until this point, okay? Which would put you up near 1440 or so, all right? Which, on its own is probably a decent horizontal level. I mean, you've got all kinds of stuff basically between 114.30, and 114.60. There's a lot of, there's highs and lows up there. So that's kind of the next area to really look towards, in my opinion. As far as buying into this trade, it's a matter of preference, but for me, 240-minute chart. For me, you can see we've so far, I tweeted out earlier, we nailed the high volume level at 1255, right? We've pulled back from that. So, this is a good example of, even though I'm bullish euro, made that kind of clear, I think. But even though bullish euro, we're still, you're still aware of where resistance is, right? You still don't want to buy into resistance, right? Even if you're bullish, right? You don't want to just be like, oh, I'm gonna buy it and pray that I'm right. You still want to get a good entry and formulate a trade. So in this case, all we're doing is this is just a line, um, just connecting this here. Okay, the high back here, and it's the high from August. Doing a modified shift, and you can see the median line here, right? Which kind of, it's not super precise by any means, but decent as far as a reaction area. So, I mean, that looks like a nice, call it kind of a collection area for support, if you will, around 1190 or so, right? And then, if you take this a step further and you look at this maybe as a completed impulse, an impulsive wave on the upside, right? Maybe a 1, 2, 3, 4, 5, maybe something like that. The retracement area would probably be down there as well, and it actually is. 50% gets you 1189. We said 1190, so there you go. All right, so that does look to be like an area that if we are really, really, really headed higher than 111.90, I think is your support in euro, right? But looking again towards the 14, mid 14s. Okay. All right, we'll move on now. Stop me, anytime if you have questions on any of this stuff. Moving on to let's go to Aussie, because I did spend some time on it in last night's post on Aussie dollar, and the volume considerations. Sushil, I will certainly take a look at your Aussie. The volume considerations are very interesting for Aussie dollar. Okay, so we had the highest volume in 1 week last week. Okay, highest volume since, I guess it was actually the week of the low, wasn't it? No, it was the 5.9, 5.9. It was the week after the lows right here. Either way, big high volume weeks, high volume days are big, high volume hours are big. Okay, but high volume weeks are just great points of reference. So, turns out, obviously, in hindsight, that was some sort of a capitulation low. And we were looking, I was thinking, I kind of want to get bullish Aussie if we went back to 73.80, 74. But we've turned up, obviously, ahead of that. And one reason to be bullish is the fact that you had that capitulation volume week last week. And check this out. This is OBV on the bottom, on balance volume. For those unfamiliar, it's just, your on balance volume, you're adding volume on up days and subtracting on down days. And what we've got here is really a uptrend in OBV since last September. Okay, so we're going on a year here of uptrend in OBV. We are actually breaking through the high in OBV. In fact, we broke through it back here in early September. Point is, sometimes you will get breakdowns in OBV before price. Okay, I could show you millions of examples of that stuff, literally. Doesn't always mean it's going to happen, but volume before price basically is just something to kind of remember. So this basically tells me that we should not be surprised to see a big rally, a big move up through resistance and a substantial breakout, because that's kind of what OBV is telling us, right? Okay, so we have that on our side. And let's take a look then at the price charts. Well, the price chart, as we all know, is getting interesting, considering that we have turned up before the support we were looking for, which was support back here. Okay, we are already into resistance, right? Last night's post, we talked about 76.55 being the level from Jackson Hole. So we've already, traded up into that level, and we're trading just right around it right now. And then on the hourly chart, thinking maybe that we have a 5-wave move underway. Now, I know that a dip all the way back into 75.30 does seem quite extreme. So look, I don't know if that's going to happen. I'm going to mark 75.30 though as a level. I'm also going to mark 75.70 as a level because it was former resistance, and it's essentially the breakout level of this, mini breakout, right? So you have a breakout level, 75.70. You had support there, right yesterday after FOMC. So that's an area that I'm going to kind of mark down and pay attention to. If we just draw this trend line here, can we get down there at some point next week? Maybe. So it's bullish and Aussie on dip type of scenario, right? That's the play. Okay, and it's kind of to prepare for what I think could be a bigger breakout attempt, right? As noted on the whole volume thing. So really pay attention to that 75.60, 75.70 area in Aussie dollar. And look, if we actually end up getting a bigger break, which we will at some point, okay, what you're talking about here is the next big resistance. I mean, look, if we break out of this long-term level here, the next big resistance might not be until all the way up, near 80, 86 or so. Okay, at that point, you're talking about the intersection of the low from January 2014. Okay, and you're talking about the slope line that really kind of originated this whole thing. So we're talking about 1,000 pips on the upside at that point. Okay. I just want to see what this would look like here. 85.20 would be a measured move from that range that we've had going on since April. And this is a very constructive looking chart. Okay. Kiwi, I'm kind of not so bullish on still, right? I mean, it's acting very differently than it's than Aussie at the moment. Maybe it was ahead of Aussie. Maybe we're seeing a passing of the baton from Kiwi to Aussie finally. And we've talked about we were short here, and we didn't get the breakdown. We got this kind of drift higher. It might actually end up being a bear flag. You can count it if you go to the hourly chart. You can really count it as an ABCX, right? ABC. Okay, you've got 7 waves up, 1, 2, 3, 4, 5, 6, 7. That's typically bearish. I'm not saying you can't get more. Okay, you could get another move higher, in which case 74 would probably be resistance. But you do have an impulse lower, 1, 2, 3, 4, 5. So my working assumption here is that you are going to break these lows at some point, and that the market's going to extend into at least 2 equal legs from the top up at 74. The high is near 74.85. All right. So whether this is a high, I don't know, or whether we try for this 74 plus area up in the air. But being bullish Aussie and bearish Kiwi, kind of obvious to take a look at Aussie Kiwi, and Aussie Kiwi might finally be ready for an attempt again. Remember, we were long here for a bit, ended up getting out at a break even 104.90 stop a while ago. But the turn higher clearly, in an impulsive manner. Okay, and here's the short-term fork to follow. Simple, right? But looks legit in the sense that look where the median line, these nice touches here was resistance, okay? The lower parallel was nice support, real precise. That was yesterday morning, or 2 days ago, excuse me, on 9/20. So, essentially the median line is where you're probably looking for support at this point, okay? Because again, it was the last resistance area. It was resistance here, then you did break through here last night, all right? So you're kind of looking at that level, and it would be near 104 basically for the rest of this week, okay? So 104 for Aussie Kiwi is really a spot to pay attention to. And on its own merit, just on its own, 104, looks like a decent, you've had some swing lows there, right? See over here, swing low here back on 824, consolidation towards the early part of this month. So getting down to that area, certainly, one to pay attention to. Okay, I'll look at some other crosses here in a bit. Hold on for a sec. Aussie Kiwi 104. All right. I have questions here on Euro Aussie. I will get to that at the end. I'll go through the majors first. Crude oil and CAD, we will take a look at that. Although, to be quite honest, I don't have a great handle on CAD at the moment. So I will look at the chart though. Let's see. We got that. Let's look at dollar yen, because this is actually a little different. Interesting take, I think. So this is the Wall Street Journal, and this is today's journal, PDF format. But here's how I read the paper, right? Here's like going through headlines. Yen puts BOJ to early test. Okay, there's nothing extreme about that headline. It is on its own the fact that there actually is an article on the front page of the money and investing section of the journal about the Japanese yen is interesting, right? I mean, you have the Nasdaq at record highs yesterday. That's not the lead article. It's actually about the yen. That's itself is pretty noteworthy, I think. So the yen surged more than 1% against the dollar. Okay, that's fine. Extending a sharp 2016 rally, marking an ominous start to the Bank of Japan's latest bid to rouse a struggling economy. All right, so the way that sounds to me, it sounds, like it's getting a bit extreme, the way it's being explained, the way it's getting talked about. Okay, the currency's up 20% against the dollar. Just an article about its rally again. Interesting. If you read the quotes in here, it sounds like the strategists that are interviewed are giving up, right? It's unclear what more the Bank of Japan can do to boost domestic demand in order to raise inflation expectations. We essentially have given up on the BOJ in terms of coming up with a policy to really turn things around, right? So it's that sentiment of like, this is we've given up. We don't know what else they can possibly do, right? There's not one person in this article that talks about being bullish dollar yen or bearish yen. Everyone's talking about 95. Okay, is quoted in here a lot. Citigroup talking about there's nothing that feels like this was a major macro stimulus effort. Blah, blah, blah. So in any way, or in any case, it's just an interesting take, I think, on the sentiment of this market, that people kind of are like giving up, which oftentimes marks some sort of a pivot or a turn in in a market, right? It's a pivot, and it's like an extreme in motion. So we've got the chart. Now, obviously, this kind of thing that we're reading into here is interesting given the chart, right? We talked about this first published, I guess, last Thursday night, but talked about the idea of 100 spot 21 spot 30. Okay, two equal legs down from the high is 100 spot 21. Okay, two equal legs right there. Daily reversal support, which is the close from 816, right? It's the low of the move. The close of that day is 100 spot 30. That's your area that you're looking for support. Okay, there's also more there than just those levels. If I take away everything here except for the forks and the trend lines, you can probably see it a little clearer. Right, you've got basically the 75% line of the decline from the fork off the highs, right? You can see that you do have a bunch of action around there, right? It might not be the cleanest at times, but it was resistance back here, okay? And it was literally tagged it yesterday, okay? So we've got a ton of stuff to work with here as far as moving higher. In the dollar yen on a technical basis. And then from the psychological standpoint of, the giving up, it feels like in that article and the feature article in WSJ, the money investing section, it does feel like we could end up going higher. So let's say that we have an A wave, a B wave, and we're working on a C wave. Okay. Well, you would have 0.618 of the A wave would be at 104.80. Okay, 104.80, and then you'd get two equal legs from this low at 104.90. So we've got a nice confluence there, 104.80.90. Okay, we could end up going to 104.80.90. That's all I'm saying. That is a distinct possibility. I don't like the dollar so much. I guess against the yen, it's maybe different, but I like euro better. I like pound better. Pound probably the most. So, euro yen, pound yen are probably going to be better opportunities. If we look at the pound yen chart, in fact, here's that pound yen chart, and we have turned up, at least for one day so far, from the 2011-12 trend line. Okay, and of course its own daily reversal support. Low 130.98. Okay, we've turned up from that level. Okay, so we do have a decent area to work with. Basically, I say when we have interns here, I tell them, what you want to do is mark down your levels, observe the market when it gets to the levels, and then formulate the trade plan based on the levels. So we had the levels marked. 131 in particular for pound yen. The market's come into that level. It's bounced. So we're going to formulate the trade. And if we go to this hourly chart, you can see quite clearly that you do have a 5-wave rally. 1, 2, 3, 4, 5. Okay, so the idea is that you want to buy weakness. All right, that's it. That's simple. Anything below 131.40, which is the former fourth wave here, is what you want to buy into. Okay. Same thing with dollar yen. It's, again, I like pound yen better, but same idea with dollar yen. You do have 5 waves up on the hourly chart. Okay, you can see it. Our 60-minute chart, 5 waves up, right? 1, 2, 3, 4, 5. So you want to buy a dip. Same thing. Okay. Moving on, I will now go to the questions on the various markets that we folks are asking about. So Sushil asked about dollar CAD and crude oil. Why don't we start with crude oil? Okay, so here's the crude chart, here's the daily chart, okay? Now, eventually, crude's really bullish, okay? Now, we've rallied off a support line here and the 618 of the rally that you saw in August. Okay, so, can crude continue higher from here? Sure, it can. I will be quite aware, however, of resistance up here. You can see the trend line from the high in June and in August. Okay, parallel from that goes off the 621 high. It was resistance a number of times throughout August and even in September. You can see here on 9/8. All right, so that means that we have those lines at about 47 bucks and 47.65 or so. Let's see if there's any daily reversal levels up there. There is actually at 47.30. So what we do is we have the reversal day here. We're going to put a bar on that, or a line on that close, and you're going to make it bold so that you know where it came from. Okay. So again, resistance is in this region. Okay. You get a setback from there, watch its form. But, at this point, this is all you kind of want to add or say. It's as detailed as you want to get at this point on crude, is that you have resistance up here. So resistance is a bit higher in the crude market. If dollar CAD and crude were 1-for-1, then you'd say that there's probably dollar CAD support a little lower. Of course, that's not necessarily the case. Here's dollar CAD. All right. So we've held these, we overshot them intraday, but essentially we've held the 55 average. We're trading right around the 20. Here's the 200, it's just over price. Okay. As it gets to dollar CAD, look, the Fed level, in other words, where we finished yesterday, okay, is 31.50, right? That's the high volume level. You've got price, resistance up there from very early in September as well. Okay, you've got 131 is the month open. Let's say that you get a move. If we end up getting a move lower, first you're going to look at 30.80, 31 as resistance, okay? If you get a rally to there and a move lower, you have 5 waves down. At that point, I'd probably expect a rebound attempt before heading lower again, okay? So it gives you a few ideas for trades here. One, watch for support down here on this parallel, which again just extends off, it's the May-August trend line, but extended off lows in June, right? I'd watch for that, around 29.50, okay? So 29.50, watch for that to provide, support for some sort of a bounce. At that point, you might end up getting a rebound. But again, this is not a market. If you don't know or have a decent feel for what's happening in the market, this is not something that I'm willing to trade at this point, right? There's better things out there. Pound yen, for example, is one. But that would be my take on it. That's my take on these levels. Okay, so that was Can Wall asking about crude oil and dollar CAD. So I hope that helps. Just quick summary for you, sir, is that 47 and change, 47.30 specifically for crude oil is a level to watch for near-term resistance. Okay, dollar CAD. You've got 29.50 is the area to watch for near-term support. Okay. Sushil had a question about Euro Aussie, so let's go there next. So I did put up a chart of Euro Aussie last night and thought we could end up getting a bounce, and wouldn't call this a bounce. In fact, it's flat on the day, as flat as you can get. Um, Bigger picture, okay, this market's going to break. I'm quite certain of that. You have essentially a descending triangle, a trend line that's tried to break basically since July. You've been trading around it for a while. So eventually this thing is going to break and it's going to get a big move lower. Okay, I have a feeling it'll be more a function of Aussie strength, but who knows? Um, there's also something interesting that you might want to take a look at here. And this is a big macro type of look, but if we took, so here's Euro Yen, okay, in orange. I'll overlay it with Euro Aussie. So you can see Euro Yen actually does tend to kind of lead it, right, at times. And Euro Yen is, led Euro Aussie on the downside for a while now. So Euro Aussie basically, I'm saying that it might try to play some catch up. And if it did that, it'd probably put Euro Aussie back near about 137 and change, right? So that's what I'd be kind of looking at on a longer term basis. Trading wise, look, this got tricky, right? We went through the median line. We were actually short over here several months ago, back in June. Market kind of, after that ripped higher, gone sideways, looked like a head and shoulders, bottom, broke higher, fake out, blah, blah, blah. Strong decline, impulsive decline here. Looking for a bounce. I'm looking for a bounce here, but I'd be on the lookout for resistance starting at 48.30, but maybe a little closer to 48, 70 or even 149. Okay, so near term, if I'm trading this, I'm actually looking for a bounce in Euro Aussie here. Okay, as long as this thing's trying to hang on for dear life, I'm looking for a bounce here. Okay, Pound Aussie is even better, right? And this is one we put up last night too on the swing update. Pound Aussie does have the potential for a really big, actually, inverse head and shoulders. So if I'm totally wrong on Aussie, in other words, Aussie's not actually bullish, or maybe Pound's just really bullish. I don't know, but that would be that's the pattern. Meanwhile, check this out. Look at these. The J spikes on Pound Aussie have just nailed these turns lately. Look at that one. Boom, boom, low, high. I mean, it's crazy. So when you see in the scans, like where it says J spike, that's what these are. Okay, we had one yesterday on Euro, right? Euro had one yesterday, as you can see. And we followed through on it. Euro's actually come off a little bit since I started doing this webinar. Let's look at the S&P real quick. So S&P 500, we're getting pretty close to this resistance. I know, crazy to talk about resistance in the S&P, but basically, if the market has topped, then I would expect that we turn down on this level. Okay. If it hasn't, then we're going back to the long-term area that we talked about for so long, which is about 22.17 now, and that's the that's the really long-term slope area. Okay. I guess you could end up with a diagonal. Those that are familiar with Elliott, right? This could be a 1, 2, 3, 4, 5. In other words, you could have an ending diagonal up here. If that ends up being the pattern, then the next move down is going to get like frighteningly ugly, because diagonals end up getting just obliterated once they're completed. right? If that happens, we kind of go into chaos. I kind of hope it doesn't, because that would just uh, that would throw a wrench probably in a lot of things, I would think, because I can't imagine the dollar weakening significantly if you get that type of volatility in the equity markets, but who knows? So, I'm watching very closely here on the S&P 500, right about here, 2180 or so. I mean, we're pretty much there, right? Real close. 2180, 2181. Let's look at another exotic, and that is dollar rand. So remember the kind of the special report we had on dollar rand back a while back, talked about the very long-term topping process, and the idea being that we were going to make ABC from the low back here in August. That might, if that's the case, then we're at the B wave low now. Well, this is a pretty deep B wave. Either way, pay attention to dollar rand. Over the next couple of days. I find it interesting that dollar rand's kind of turned up today as the S&P is getting up into resistance, right? People talk about risk on, risk off stuff with yen. Still, it's not really the yen that's risk on, risk off with the S&P. Yen is, you got to watch the Nikkei with the yen specifically. Okay, when you go full on, risk off, then sure, you're going to get every market falling, and pretty much the only thing going higher will be yen and maybe dollar. But if you're following the S&P these days, look at these EMs. Okay, look at dollar rand specifically. The peso is a little screwed up because of the whole election effect, but look at dollar rand. Okay, because it's been very clean in the way that it's moved. Right back, for example, when we had it turned lower. Back when you had that big frightened decline in the S&P, the dollar rand was right here, hit resistance, right? Kind of telling you that you might not actually things might not be as bad as everyone thinks they are in the near term. Okay, that was just as the S&P was hitting support. So, keep an eye on this exchange rate dollar rand. Got a question on gold. Sure thing, my friend. Let's check that out. Got a gold chart here for you. All right. Gold is incredibly back at the trend line from 2011, 2012. Here's a thing for gold here. Okay. The forks, the slope, if you will, looks cleaner, I should say, on silver than it does on gold. So I will show silver here in a moment. But check this out. You have a very clean trend line going on here in gold. Okay. See the touch there? Boom, very clean. You also have what appears to be just a flag. Okay. Bullish flag here on the downside. So this could mean several things. One, there's several ways to measure this. Okay, take the width of it and add the difference, and that's going to get you 1450, which actually is very close to the high from August of 2013, which is your wedge target at 1433 or so. All right. So you have targets up here of 1430 to 1450. Okay, if indeed gold is going to make its move. Look, you can spend more time in this flag. Okay, as you know, I've been waiting and thinking that gold's going to get down closer to 1270, and we've had real crowded positioning as far as COT is concerned. So the fact that it's just kind of worked sideways in this flag tells me that maybe gold is actually pretty bullish, right? Because if you can't get a drop on such extreme positioning, it basically means that you're not bearish. Okay, so with gold, I would be looking higher in gold. If I go to an hourly chart, clean levels, former lows, 1330. Okay, would pay attention to those if you ended up getting pullbacks on those levels. I mean, you are coming up to resistance from the flag area about 1347. Okay, so your near-term level is 1347, and then down near, again, would say 13, around 1330. Now, silver is the cleaner metal right now. Okay, here's silver. You can see how clean it is. So watch silver because, okay, you get the median line supports. Okay, now we're coming up on an area in silver that's actually been kind of resistance turned support. Okay, you can see here, right here, right? Kind of resistance or support here turned resistance. So we're coming up on this area again. So, I would pay closer attention to um, to silver than gold. Okay. I hope that makes sense. So here's your, again, your silver level looks to be about 2020, and the area that I'd watch for support now would be this line right here. Okay, thereabouts. I mean, you've seen the market respond to that level before. Really, that's the last, we kind of zoomed through there back here in July as well. It wasn't the most precise stuff in the world, but you did have resistance there back in April. Silver's acting very well. Okay, silver is, I tweeted yesterday. It's probably one of my favorite kind of charts right now. Okay, is silver. It's acting very well. It's simply in an uptrend. Showing good strength, finding supports where it should. The median line acting very well at the median line just above it actually. So silver is a very good looking market as far as technically speaking at least. Which is weird because for years gold's been the much cleaner market, but that seems to have changed at least this year. Is there anything else that I can answer for anybody out there? If not, I'm going to finish it up here. I'm going to wrap up this webinar, get it archived so that I can get it on the website and then get to work with the update for later tonight. All right. Okay, great. Okay, well, everyone have a super rest of your week. The rest of it that's left. It is Thursday. You've got Friday left. So, Sushil asking for yen and silver. I just went through silver. This was the silver chart right here. Basically looking for support at 1940. Okay, I'm bullish in the uptrend, right? And you got resistance potentially around 2020. Dollar yen we went through earlier. We're saying that you have 5 waves up on dollar yen from a big support, right? We had this support laid out as early as last Thursday. We said 1002130. We bottomed just below there last night. So we are looking higher from here. This Sushil, so I'm looking for a rebound in dollar yen from here. Okay, so that would be yen bearish, but as noted earlier, I do think that there's better opportunities in yen crosses. So I would actually be willing, I'd be more willing to trade pound yen, okay, than dollar yen, right? So be looking, to trade pound yen more so than dollar yen on the upside, okay? Right. Okay, so I hope that helps. Is that, yep, okay, great, no problem, super, great. Okay, all right, so I'll wrap it up here. Everyone have a great rest of your week. All right, take care. Jamie Setley here, signing off.